All right, let's jump right into this explainer. We're looking at the absolute tier. Semiconductor packaging giant Amkor Technology has been on for Q1 2026. If you're tracking the semi-supply chain, you already know packaging isn't just some afterthought anymore, right? It is literally the main bottleneck for AI and high-performance computing right now. And Amkor? Well, they're sitting right in the dead center of this whole revolution. To really decode Amkor's trajectory, we're going to break this explainer down into 4 quick parts: their financial boom and valuation, the AI and comms demand, their massive global footprint expansion, and finally, the customers and risks. All right, part 1, record Q1 financial boom, pricing for growth. $1.68 billion. That is a staggering number, and it represents Amkor's record first quarter revenue. We're talking a massive 27% jump year over year. To really put that into perspective, their factory utilization rate jumped from the low 50s last year straight up to the low 70s in just 12 months. They pulled this off by tapping into some really broad-based end market demand and, honestly, executing with just incredible operational discipline. Now check this out. At a current PE ratio of 39.07, Amkor is sitting roughly 42% higher than their historical average. That clearly shows investors are betting heavily on future earnings. The market isn't just looking at what Amkor did today. No, they're pricing in this massive, multi-year value creation journey that management is promising, which is driven by the whole industry structurally shifting towards advanced packaging. And when you actually look at the product line side by side, the main revenue driver is just glaringly obvious. Advanced packaging products, things like flip chip and high-density fan-out wafer-level processing, brought in $1.37 billion. That absolutely dwarfs their mainstream wire bond offerings, sitting down at $313 million. So advanced packaging isn't just some side hustle for them. It is the overwhelming engine of their entire business, operating at high utilization while those mainstream factories are really just starting a much slower recovery. Moving on to part 2. AI and communications drive demand. Where the money is. So if we break down the Q1 revenue, communications actually leads the pack at 44%, which is driven heavily by some really robust strength in the iOS ecosystem, which, fun fact, actually outperformed typical seasonal trends. Meanwhile, computing and automotive each hold a very solid 21% share, and consumer electronics rounds out the whole shebang at 14%. But here's the catch. While communications is the biggest slice of the pie today, the most aggressive growth narratives are absolutely happening in those computing and auto sectors. Just look closely at that computing segment. Amkor expects their advanced AI packaging revenue to triple this year. Literally triple. This is being fueled by new data center CPU programs ramping up, specifically using that high-density fan-out technology. And they're currently engaged with over 5 different customers on these advanced platforms, meaning they aren't just crossing their fingers on one lucky contract. The demand is absolutely there. Honestly, it's really only limited by the availability of silicon and memory components in the broader global supply chain. But hey, beyond AI, we can't ignore the cars we drive, right? Their automotive and industrial segment just hit record advanced technology revenue, jumping 28% year over year. As vehicles basically turn into supercomputers on wheels, thanks to advanced driver assistance systems and those massive complex infotainment screens, the need for highly reliable advanced semiconductor packaging is just skyrocketing right alongside it. Okay, part 3. Expanding the global footprint, building the future. Get this. Amkor is projecting a massive capital expenditure for 2026, somewhere between $2.5 and $3 billion. And where exactly is that mountain of cash going? Well, a massive 65% to 70% of it is dedicated strictly to physical facility expansion. They are laying the bricks and mortar today for the revenue they expect to capture at the end of the decade. The absolute crown jewel of this CapEx is their $7 billion advanced packaging campus out in Arizona. And this follows a really strict timeline. In 2026, it's all about foundation and steel. By 2027, Phase 1 construction finishes up. But note that this is also when we're going to see some short-term margin dilution as those startup costs kick in. 2028, that's for scaling and training the workforce. And finally, by 2029, they expect to see a meaningful revenue impact. It's a long game, guys, designed to create a full turnkey supply chain right here in the United States. But rather than shoulder that massive $7 billion burden entirely alone, Amkor is brilliantly leveraging external funding. They secured a $400 million CHIPS grant from the U.S. government, plus a highly lucrative 35% investment tax credit. Add in direct financial support and partnerships from their core customers, along with their own $2.9 billion in total corporate liquidity. Yeah, they are extremely well-positioned to finance this monumental build safely. But as CEO Kevin Engel quickly points out, it's not just an American expansion. They are rapidly expanding test buildings in Korea, which is going to be absolutely critical to supporting the incremental data center demand we expect to see hitting in 2027. On top of that, they're ramping up advanced packaging deliveries from their brand new facility in Vietnam. Essentially, they're migrating some legacy product lines over there just to free up premium floor space in Korea for the absolute most advanced AI chips. Which brings us to part 4. Customers, valuation, and risks. The reality check. Now, a major vulnerability we have to talk about is customer concentration. In 2024, Amkor's top 10 customers accounted for a whopping 72% of their total net sales. While they are actively trying to diversify their end market exposure, you have to realize that losing even one of these massive clients, or even just suffering a delay in a major client's product roadmap, could create some severe turbulence for their quarterly numbers. Furthermore, CFO Megan Faust warns that as the Arizona facility transitions from construction to operations, those startup costs, which shift over from operational expenses to the cost of goods sold, are going to temporarily dilute their operating margins by about 1% to 2% beginning in 2027. So investors paying a premium PE today really need to be prepared for this planned temporary hit to profitability well before the megafactory reaches full scale in 2029. And we definitely can't ignore the immediate operational hurdles. Amkor is facing very real supply chain bottlenecks right now. Delays in getting advanced silicon and memory from suppliers are creating, well, non-linear loading in their factories. Add to that geopolitical tensions in the Middle East pushing up commodity prices. Management actually estimates these combined factors risk pushing $50 to $100 million in revenue out into future quarters. They're actively managing it by working with customers on pricing adjustments, but man, the friction is undeniably real. So the final question you really have to ask yourself is this. With a PE ratio pushing 40, significant customer concentration risks, and a planned short-term margin dilution on the horizon, can Amkor's undeniable AI momentum and their aggressive global expansion truly justify this high growth valuation? I mean, they are physically building the critical infrastructure of tomorrow's technology, but the multi-year journey to get there is going to require absolutely precise execution. I hope this explainer helped clarify the mechanics behind Amkor's strategy, what's really driving their revenue, and what you need to watch out for. Make sure to keep a very close eye on those CapEx milestones going forward.